Hello, good evening to you. Warm welcome to Business Live. Coming up in this bulletin, new Deloitte West Africa report points out fiscal discipline and cedi stability will support sustained decline in inflation. We are live with Deloitte for more. Also in this bulletin, Association of Ghana Industries expecting utility tariffs cuts on the back of the strong Cedi performance.
Exchange rate system, and then the international oil price, energy mix and all that. So we expect that in the next review, for example, all things being equal, with the improvement we've seen in the city, we should have, it should reflect in the energy tariffs.
Plus government to borrow 5.55 billion cedis tomorrow from the Treasury bills auction. We have details of this and more lined up for you. Please stay on. Thanks so much for your time. I am Pius Kojobaka. Looking at our stories, Deloitte West Africa has disclosed that policy tightening, fiscal discipline, lower energy costs and stable cedi will support a sustained decline in consumer prices. There is more in this report.
It's April 2025 West Africa inflation update. It, however, cautioned against domestic inefficiencies, which it said will remain an upside risk to the ongoing downward trend. Ghana recorded a fourth consecutive decline in inflation in April 2025 to 21.2%. In that regard, the professional services said the Bank of Ghana will have more leeway to adjust monetary policy as inflation falls further. The International Monetary Fund is projecting a high year-end inflation rate for Ghana of 17.5% compared to the government's 12%. Deloitte said food inflation remains a significant driver of cost of living pressures despite the decline to 25%. Inflation for oils and fats recorded the highest inflation in the food and beverage subclasses. The monthly inflation for April 2025 increased to 0.8% from 0.2% in March 2025, indicating a resurgence in inflationary pressures.
Dennis Brown is the manager, financial advisory services at Deloitte, and thankfully joins us via Zoom to highlight some pointers from the report. Thank you so much, Dennis, for agreeing to speak to us on Business Live. Now, the report talks about policy tightening, fiscal discipline, lower energy costs, amongst others, as main drivers to support a sustained decline in consumer prices. Tell me more about it and how so.
Improvement we are seeing in terms of pricing development, particularly over the last few months, we've seen stability in the exchange rate, and that we had always expected to be tailing on the inflation, and is beginning to have that tailing impact on inflation. We've seen inflation, prior to April drop just marginally from 24 to 23% in March, and then Bank of Ghana tightened the monetary policy by 100 basis points to, I think, 28% from 27%. And then the result we've seen in April is that there's been a more notable decrease in inflation, right? So clearly, it looks like the tightening of the monetary policy is yielding some results, and therefore we're saying that perhaps that should be maintained, or we should persist in that line. What that means is that the Bank of Ghana could increase by another 100 or 50 basis points, seeing that it has yielded that positive benefits, and or maintain it, looking at what it has achieved. So when we talk about tightening monetary policy, that's what we mean. But when we also talked about fiscal discipline, which it has to do with, away from Bank of Ghana, what it does on a day-to-day to manage the pricing developments, to the government policy itself around revenue and expenditure mobilization and keeping budget deficits at bay, etc. All of that, which also has an impact on inflation. So clearly, fiscal discipline has been one of the main issues we've dealt with historically, and we are thinking that yes, going forward, as government has done so far, they must persist in that line of being fiscally disciplined. What that means is that on the expenditure front, we must rationalize expenditure into productive areas of the economy to improve supply, right? When supply it improves, products become more available, inflation or prices remain low. Also, government must reduce expenditure where it can to cut down waste. That has also, historically caused excess liquidity in the system, which results in demand pull inflation. So you have money in the hands of a lot of people that are chasing fewer goods, then resulting in, inflationary pressure. So clearly, if government can sort out its fiscal discipline issues and get it right, that is also going to have a positive bearing on inflation. We also talk about lower energy costs. Traditionally, energy costs, as you know, has always reflected sharply in inflation. Whenever prices at the pumps goes up, even cocoa sellers and all manner of people would have reason to increase their goods and services. So clearly, if you are able to keep the energy costs at bay, that will also, inure to our benefit in terms of our pricing development. Yeah,
that's fine. Realistically, do you think, looking at the positive trajectory we are recording, it's sustainable going into the third and fourth quarters of this year?
Yes, why not? It should be. I mean, going into the third and fourth quarters, we will still regard that as, over a short time frame, right? Over a short time, we do not expect anything so significant to kick us off track. What the government has to do within that time frame is to ensure that we continue building our reserves. That's the main thing. We are also learning that the reserves are being anchored by our gold reserves, where if we have commitments to make in terms of USD, because gold is also a very strong store of value, we are having to substitute with gold so that the pressure on our dollars comes down. What it means is that as so far as we build our reserves in terms of USD and gold, we should be fine. Then secondly, Bank of Ghana should continue on this trajectory of being proactive with its liquidity support, ensuring that demand from the market does not, significantly outweigh supply, which would then usher us into depreciation. Because once that happens, just momentarily, it creates perception in the market that, there could be shortage in supply, and then people begin to hold dollars that they will need 3 months down the line, which then creates more issues in terms of depreciation of the cedi. Now that we are experiencing appreciation, clearly you can tell that that is influencing people to release the dollars that they've hoarded because it's losing value, and it's also creating more, positives for us in terms of the appreciation of the cedi. So yes, over a short time, in terms of the next quarter and the last quarter, we do not expect anything significant to kick us off track. We expect Bank of Ghana to maintain a healthy reserves and to be proactive in terms of its liquidity support in the market to maintain the exchange rate and therefore inflation rate, going in the direction that it's going. We are positive that the government, if it persists on the current track, should be able to achieve its year-end inflation target of 12%. But it requires consistency, on the path that we've chosen currently.
And Dennis, I want you to throw more light on some of the potential threats likely to erode the gains if a comprehensive interventions, like you rightly mentioned, is not put in place. Yeah,
we did mention domestic inefficiencies in our report. And if we talk about domestic inefficiencies, I could cite two major ones. On the monetary side, for instance, I did mention that if we are not careful and create perception of there being shortage in supply of the USD, the market will react, in a way that will hurt us. So people will rush for dollars to hold it because there's a sense that, it might be in shortage, and that then will kick us into significant depreciation. They will then have a pass-through effect that will then begin to, increase inflation. Then we also talked about fiscal discipline, which is also a domestic measure. If government fails to maintain the fiscal discipline that it has, followed so far, then we are going to run into issues on the supply side, right? Domestic inefficiencies that exist already in relation to, for instance, the value chains that are underdeveloped. We talked about this several times, that there are productive, sectors of the economy that are doing well in terms of production at the primary end, but how the goods finds their way into the market, there are so many bottlenecks that then creates, opportunities for those in the middle line to profiteer, and at the end of the day, the final price to the consumer, is increased. If we can fix those bottlenecks along the various value chains across the multiple industries that we have, then we'll be able to also keep inflation at bay. So these are some of the domestic inefficiencies that we have to use homegrown policies to address. And there is definitely represent upside risks. But even beyond the domestic policies, there are also in terms of upside risks, there is what can happen in the international market, right? We are an import-dependent economy. If you are importing from a country where the country of origin has experienced an increase in price of goods and services, that will be translated here.
All right.
So and that's something that we can't do anything about, right?
Yeah.
So there are other external shocks that may pass through that we can do very little about. But let's hope that overall we are able to at least get our homegrown policies right, and hope that what happens internationally may inure to our favor, or maybe more favorable to us in this regard.
That's fine. Let's wrap up with this. As we speak, the Monetary Policy Committee of the Bank of Ghana is assessing the health of the economy, basically. And I'm wondering what your outlook is.
Sorry, come again.
I'm asking you to tell us what you foresee happening going forward as the Monetary Policy Committee of the Bank of Ghana meets to assess the health of the economy largely.
Yeah, I think that we are expecting that they either maintain the policy rate or increase it marginally in furtherance of the disinflation that we are seeing, because that's primarily what they wanted to achieve, or they've always wanted to achieve, to keep inflation close to our medium to long-term target of 8 plus or minus 2%. So if you look at March, what they did and the reasons they provided, they acknowledge that there's been positives from the beginning of the year. There have been positives, but inflation still remains high at around 24-23%. So they inched up the monetary policy rate. We are looking at inflation that is still over 20%. Although it has come down to 21%, nowhere near our medium to long-term target of 8 plus or minus 2%. So the temptation will be to increase it further, looking at the positives we gained from the earlier increase, or at least maintain it if there are if there are concerns that might end up translating into high borrowing costs. So it's a balancing act that has to be achieved there, but this is what we are expecting.
Dennis Brown, thank you so much for speaking to us here on Business Life. I truly appreciate your input at this very moment. Let's stay a while longer at the central bank, because Governor Dr. Johnson Isiama should say, is warning that the country's full economic stability is fraught with risk and some complexities. The governor highlighted these issues at the opening of the monetary policy meeting.
Outlook, while improving, remains vulnerable to second-round effects. Food supply constraints are still with us, especially from northern Ghana and the Sahel, and external price shocks, particularly given volatile global commodity markets. There are also geopolitical tensions and evolving global trade dynamics, including the recent US-led tariff disputes. These have heightened market uncertainty and could affect commodity prices, could affect exchange rates, and could affect financial flows in emerging markets like ours. In this context, colleagues, the bank has commenced a comprehensive review of its monetary policy implementation framework. We are transitioning from reliance on the unremunerated cash reserve ratio to a more active open market operations regime, including the use of longer tenor BOG instruments, as we announced at the previous MPC, the maiden MPC that I had. This is intended to enhance policy transmission. It is intended to improve liquidity management, and it is intended to allow greater room for credit expansion to the private sector. Colleagues, as we approach our deliberations, we must carefully assess whether the current monetary policy stance remains adequate to drive disinflation without undermining the fragile growth momentum we have currently.
Now, the Association of Ghana Industries is anticipating a reduction in utility tariffs, citing the impressive performance of the city. Speaking on the sidelines of the Renewable Energy and Energy Efficiency B2B Expo in Accra, Chief Executive Officer of the AGI, Seth Chumakwa, said a reduction in tariffs would ultimately lower the cost of operations for businesses.
Impact cost of operation, it takes a while, but it will. For example, recently we had increase in electricity tariffs, right? From I think to about 14%. Now, a major determinant of the cost of electricity when they are doing the automatic adjustment system is the exchange rate system, and then the international oil price, energy mix, and all that. So we expect that in the next review, for example, all things being equal, with the improvement we've seen in the city, we should have it should reflect in the energy tariffs.
Chief Executive Officer of the Association of Ghana Industries, Seth Chumakwa, welcomed the drop in producer price inflation for April 2025.
We know how the inflation is calculated, and it's very much determined by the producer price index. And I think for some time now we've experienced stability in the economy. We've seen the city gaining some weight, and there has been encouragement to companies, to businesses, to traders to reduce prices. And as the price reduction is going down, then we expect to see a reduction in the PPI. So I think it's a reflection of the improved macroeconomic conditions that we are having, and we welcome it.
Acting Director in charge of renewable energy at the Energy Commission, Frederick Appiah, outlined plans to introduce a net metering system aimed at promoting efficient energy use and boosting investment in renewable energy solutions.
And PRC, that's the Public Utilities Regulatory Commission, has come up with the metering rate, the net metering rate, the tariff mechanism. So what it means is that when you export to the network, how much you are due, and when you consume, how much you should pay. And it serves as a savings for you, because the excess energy would have gone waste, but now you are benefiting from it. And also there's a subsidy mechanism to that project that we are bringing. What it means is that you will get some kind of money, an amount to top up and buy a new solar system. And then in addition, you get a free net meter. We've already finished the regulations covering it. Energy Commission has published a net metering code.
The Renewable Energy and Energy Efficiency B2B Expo, organized by the Association of Ghana Industries and the AGI Energy Service Center, brought together stakeholders and businesses across Ghana's renewable energy space.
One of our lead stories, the government will borrow 5.55 billion cedis on the Treasury market tomorrow, 23rd May 2025. And this will be done via the issuance of 91-day, 182-day, and 364-day bills. More in this report.
Funds will be used to settle maturing bills worth 5.35 billion Ghana cedis. Demand for the short-term instrument has declined in recent times, with the government missing its target for the third consecutive week. Last week, investors submitted 5.35 billion cedis in bids, but the Treasury took only 2.76 billion Ghana cedis, a sharp pullback from the previous week's full acceptance. The auction fell short of the 6.68 billion Ghana cedis target and 6.44 billion Ghana cedis in upcoming maturities. Yields on the 91, 182, and 364-day bills dipped week on week. Some analysts say the Treasury's selective acceptance reflects a deliberate effort to contain upward yield pressure despite tightening liquidity, as institutional demand shifts toward the Bank of Ghana's 56-day bill, which raised 10.9 billion Ghana cedis last week.
Still watching Business Life. We have more for you after this break. Hello again. The government is undertaking a review of the current automobile policy to include provisions for the assembling of larger trucks and construction machinery. These initiatives form part of broader efforts to expand the local automobile assembly industry and enhance industrial growth. Minister for Trade, Industry and Agribusiness Elizabeth Ofosu-Adjare made this known during a visit to the headquarters of Zonda Tech Ghana Limited in Tema.
The visit by the Minister of Trade, Industry and Agribusiness forms part of initiatives by the government to engage industries on the 24-hour economy to increase youth employment. According to the Minister, Elizabeth Ofosu-Adjare, Ghana's automobile policy is being reviewed to provide incentives to industries in the tipper trucks and other construction machinery space. She believes that working with the company on the policy and the flagship 24-hour economy will support job expansion.
We want to create giants in the auto industry so that they can employ more. Now they're employing 500 Ghanaians. We want them to double it, triple it. We've had discussion with them. They're also interested in plugging into the 24-hour economy, 3 shifts, 3 workers, 1 job. So if they are tripling what they are doing right now, we can only guess what will happen here. The auto policy does not cover the big trucks that they do. So we are reviewing the auto policy to include what they do. And I think these are the things that will encourage them to produce more. I'll be traveling to China under the instructions of His Excellency with them and other Chinese companies. We want to go to China and bring more people to invest in the auto sector and other subsectors of the economy. So I'm happy at what I'm seeing.
Managing Director of Zonda Tech Ghana Limited, Yang, expressed commitment of her company to invest more in the country's auto industry.
We assemble heavy equipment like bulldozers, graders, excavators, and also tipper trucks, trailer heads, oil tankers, and flatbeds. And in the meantime, we're enjoying auto policy by assembling the pickups, the SUVs. Now, we are in our #1 factory. We have 3 factories. We also have 8 branches. We have a staff of 500. Ghana is a very positive environment. I love Ghanaians because, you see, I always say Ghana is like a white paper. Depending on how you are writing on it. If you have a positive energy, you write positive energy on it, all of the Ghanaians will follow us doing positive things.
The Trade Minister and her entourage examined some of the vehicles already assembled by the company as part of his working visit.
The Design and Technology Institute, in partnership with Accra Technical University and with support from MasterCard Foundation, has launched a significant initiative aimed at incorporating precision quality into technical and vocational education and training known as TVET curricula. The collaboration is part of ongoing efforts to strengthen Ghana's TVET and livelihoods landscape by aligning classroom theory with practical industry demands. More in this report.
The collaboration between the Design and Technology Institute (DTI) and Accra Technical University is aimed at bridging the gap between classroom learning and industry demands through the introduction of precision quality training. This initiative seeks to equip students with job-ready skills and improve livelihoods. Speaking at the launch event, founder and president of DTI, Constance Elizabeth Swanika, underscored the importance of embedding industry-relevant skills with academic institutions. She also called on government and other institutions to support enhanced collaboration for meaningful economic growth.
Through these partnership arrangements, DTI and ATU are establishing a new national benchmark, one that will serve as a standard for delivering TVET with global precision standards, strengthening public-private collaboration for national development, and repositioning youth to embrace TVET as a dignified and a prosperous career path. We'd like to extend an open invitation to the government of Ghana to collaborate with DTI to scale this model nationwide. DTI is prepared to partner with public institutions to catalyst economic transformation through skills training and youth employment.
A speech delivered on behalf of the Deputy Minister of Education by the Director of Tertiary Education, Dr. Emmanuel Newman, conveyed the ministry's full endorsement of the initiative.
This inclusive approach aligns perfectly with government's goal of reducing youth unemployment and improving access to technical education. Let me assure you that the Ministry of Education supports this initiative wholeheartedly. We are committed to developing policy frameworks and enhance sustainability, promote industry co-management of training centers, and facilitate job placement through embedded internship and certification schemes. The Tertiary Directorate stands ready to support you in all your endeavors in dimensions of this nature.
Regional Chair of the Association of Ghana Industries AGI, Chonam Klensakpelo, expressed his excitement about the initiative's potential to inject quality into the industrial sector.
For the first time, we're having graduates that are ready for employment. In fact, if you go to most of our factories here in Accra, in Tema, you see that most time we have to even bring people, factory hands from India and other parts of Asia. But with this precision education, it allows us to have our graduates not only trained technically, but also to acquire the ethics and the discipline required to be hired in our factories. And so AGI is super excited about this initiative, and we fully endorse it.
The collaboration marks a significant step towards preparing Ghanaian students for the evolving demands of the workforce and reinforces the role of technical and vocational education and training in national development.
Thanks for your company. I am Pius Kojobaka.